Welcome to Wealthfinity, the channel dedicated to helping you navigate the world of personal finance and wealth management. In today's video, we will be discussing how to plan the perfect finance versus operating lease. When it comes to leasing a vehicle, it's important to understand the differences between a finance lease and an operating lease, and how each option can impact your financial situation. Making the right choice can save you money and provide you with the flexibility you need. So, let's dive in and learn more about these two leasing options, and how to choose the best one for your specific needs. Finance versus operating lease. What you need to know before signing. Leasing is a popular way to acquire assets without having to pay the full price up front. It allows businesses to obtain the equipment they need without having to tie up a large amount of cash or take out a loan. When it comes to leasing, there are two main types of leases: finance and operating leases. Each type of lease has its advantages and disadvantages, and it is important to understand the differences between them before signing a lease agreement. Finance lease. A finance lease, also known as a capital lease, is a long-term lease that transfers ownership of the asset to the lessee at the end of the lease term. With a finance lease, the lessee is responsible for maintaining the asset, paying for any repairs, and insuring it. At the end of the lease term, the lessee has the option to purchase the asset for a predetermined amount, which is usually the fair market value of the asset at that time. One advantage of a finance lease is that it allows the lessee to acquire the asset without having to pay the full cost up front. Instead, the lessee makes regular payments over the term of the lease, which can help to improve cash flow. Additionally, because the lessee is responsible for maintaining and repairing the asset, they have more control over its upkeep. However, a finance lease also has some disadvantages. Because the lessee is responsible for maintaining and repairing the asset, there may be additional costs that are not factored into the lease payments. Additionally, if the lessee decides not to purchase the asset at the end of the lease term, they may be responsible for disposing of it. Operating lease. An operating lease, also known as a service lease, is a short-term lease that does not transfer ownership of the asset to the lessee. With an operating lease, the lessor is responsible for maintaining and repairing the asset, as well as insuring it. At the end of the lease term, the lessee simply returns the asset to the lessor. One advantage of an operating lease is that it allows the lessee to obtain the asset they need without having to worry about maintenance or repair costs. Additionally, because the lease term is short, the lessee can easily upgrade to newer equipment as needed. However, an operating lease also has some disadvantages. Because the lessor is responsible for maintaining and repairing the asset, the lease payments are usually higher than they would be for a finance lease. Additionally, because the lessee does not own the asset, they may not be able to use it as collateral for other loans. Which is right for you? When deciding between a finance lease and an operating lease, it is important to consider your specific needs and financial situation. If you need a long-term asset and want to eventually own it, a finance lease may be the better option. If you only need the asset for a short period of time and want to avoid maintenance and repair costs, an operating lease may be the better choice. Ultimately, the decision comes down to your individual circumstances and goals. By understanding the differences between finance and operating leases, you can make an informed decision and choose the option that best fits your needs. Considerations before signing a lease. Before signing any lease agreement, there are a few other important considerations to keep in mind. First, it is important to read the lease agreement carefully and understand all of the terms and conditions. This includes the length of the lease term, the payment schedule, and any penalties for early termination. It is also important to consider the cost of the lease over its entire term. This includes not only the lease payments, but also any additional costs such as maintenance and insurance. Make sure you have a clear understanding of all of these costs before signing the lease agreement. Another consideration is the flexibility of the lease agreement. If your business needs change during the lease term, will you be able to modify the agreement or terminate it early without incurring significant penalties? Make sure you understand the options available to you in case your circumstances change. Finally, consider the reputation and track record of the lessor. Are they a reputable and reliable company? Have they had any issues with fulfilling their obligations in the past? Make sure you do your research and choose a lessor that you can trust to fulfill their obligations under the lease agreement. Leasing can be a great way to acquire the assets you need without tying up a lot of cash or taking out a loan. However, it is important to carefully consider the differences between finance and operating leases before signing any lease agreement. Make sure you understand the terms and conditions of the lease agreement. the cost of the lease over its entire term, and the flexibility of the agreement in case your circumstances change. By doing your due diligence and choosing the option that best fits your needs, you can make leasing work for your business and help it grow and prosper. In conclusion, planning the perfect finance versus operating lease requires a thorough understanding of the advantages and disadvantages of each option, as well as a clear understanding of the specific needs and goals of your business. Whether you choose a finance lease or an operating lease will ultimately depend on a variety of factors, including your cash flow situation, your long-term plans for the asset, and your overall financial strategy. By carefully evaluating your options and seeking expert advice, you can make an informed decision that will help you achieve your business objectives and maximize your return on investment. Remember, the key to successful leasing is to do your homework, ask the right questions, and carefully consider all of your options before making a final decision.